this is Connie from Prosperity Finance. I hope you're well. Sharing the best financial tips so that you can be more successful with achieving your financial goals. Today, I'm going to share with you a case study that we recently did for one of our clients. So the client came to us because when they bought a house, they borrowed from BNZ for the first home. However, the risk was quite high. It was 5.69%. Given the market is around 3%, something like that, for them is, quite expensive. So they just want to know if we can help them to, lower the rates. We take the case a bit further and understand what causing the high interest rates, and then we find a solution for client. In the end, we help the client save roughly around 300 grand over the the entire kind of long term. So they're really happy. And on top of that, we also review the other liability like a personal loan. They did even ask us to do that because they came to us for home loan, but we also saved them 5 grand over the next 4 or 5 years. So today I'm going to share with you the detail and see how we did it. Okay, so this is a calculator on our website. You can tap Prosperity Finance and you should come to this site. And on our website, we have a page called Calculator. So you will see something like this. This client borrowed 576,000 long-term 30 years, and they're currently paying 5.69%. Now, as I said, we always ask the reason why or the purpose of client's request. Now, in this case, what happened was a year ago, client purchased this house for 620K. They borrowed 576,000. Now, obviously, the LVR loan-to-value ratio is quite high. It's actually over 90%. Luckily, they had approval from the BNZ. Because it's a high LVR, they have to pay kind of really high interest rate. That's because it reflects the risk of the bank. So it's normal rates for high LVR, right? However, first thing we did was we actually checked the property from a system where actually bank use to see what is the estimate market value. So we use the same system. So we put a client's home address and we find out the property has gone up value significantly. So remember I said they purchased for 624K and now it was 714K. So now the LVR loan to ratio is just close to 80%. It's actually 79.5%. So which means they are no longer high LVR loans. So that's really good news. We are quite confident we can get that lower rates, right? However, we just want to get the most value for the client. So we suggest clients to refinance the loan to cover the legal costs, and also they had no cashback from BNZ in the first place. So they don't have any strain that stop them from refinancing. It's not like if bank give you a cashback, you have to stay with that bank for at least 3 or 4 years. In this case, they don't have to because they had no cashback, right? So we help them, not only secured much lower rates at 3.39, but we also help them get almost 5 grand cashback. But have a look these 2 slides. Currently they are paying 770 per week, and look at this number. Over the next 30 years, they're going to pay over 600K just on interest alone. And they only borrowed 576. So by the time they finish paying the loan, they're actually paying more than $1 million. So the quicker we can get rid of the home loan, the better, right? It's saved significantly. Now, when the rates drop, they can still choose 30 years and basically just reduce your payments. So from $770 to $588. even though they're still going to pay over the next 30 years, but look at the savings. So the interest amount dropped from 625 to 341. So that's about 300K saving over the next 30 years. Now, we actually recommend clients to think about, keep the previous payment because they can afford that, right? Now, if they do that, you see, this is a new rate, the lower rates, and that's what they pay, before they came to us. So if they have a combination of the rates and the payment, look at the interest. It's only 214K. And look at what was, expected interest. So the saving, is over 400K. That's so significant. And they will save 10 years of paying that off, right? So which one would you like? Okay, so it's kind of a no-brainer. Well, in this case, client in the end chose 588 because in their situation, they expect their first, baby in a few months' time, and the mother is going to take maternity leave. So from cash flow, perspective, probably safer, to have some disposal kind of a cash. So in this case, they will take the 588 per week payments. But their plan is once the baby goes to grow up and goes to daycare, and mom goes to go back to work, then they will increase the payments and get rid of that loan, as soon as possible. Now, remember, in the beginning of this video, I talked about we also help them, reviewed their other loans. So they had a personal loan with Harmony. That's the loan with Harmony, before we made restructure. Now, they borrowed some personal because, when they had a wedding, there's some, huge costs. So they had to finance that cost. And then on top of that, they also purchased some furniture and appliances for the new home. So they together borrowed 37,000. Now that's currently what they pay. Actually, it was slightly more than that. So it's about 20.04%. We just use that, just for easy calculation. So they are paying, another $980 per month. It's not too significant, it's a monthly payment. But if we can knock it off, save that rates, obviously, that will be, beneficial. So we reviewed their personal loan, even though they didn't ask us, but we thought, maybe we can get them a better deal. So that's what we did. We secured a similar amount for 16.9%. Now, this is still slightly higher. Sometimes we can get to, 13% or less. But, when the personal loans get assessed, there's a combination of things you need to take into account. Your residency status, your income, and your credit score, your repayment history, everything, take into account. But anyway, in the end, this is the best we can get. But, it's still good results. So if they want to, reduce the payments, they can. So save about $60 per month, and interest reduced from 21,000 down to 18,000. But what I did recommend them to do is actually paying similar amounts at a lower rates, and see the interest is only not even 16K versus almost 22,000, right? So because this is a higher rate and also a smaller amount, so we recommend them to focus on paying that off first, all right? So that they can, use that payment and add on top of their home loan, help them to knock off the home loan even quicker. All right, back to the screen. So the reason I want to share this video with you is I just want to illustrate that normally when clients come to us, they say, I want to do this or that. For example, refix a lower rates or refinance or whatever. We always take one step back, actually trying to understand the root and help from the root. In that case, they did got approval from BNZ when they purchased first home. But you know, it's really about, you know, ongoing review and make sure the, you know, loan structure still you know, match their personal kind of situation. You know, in this case, you know, I think they reduced their payment home loan from $770 per week to $588. It's actually, you know, it's a good choice because, you know, expect, you know, the income reduce for the next year or two. So it's actually good thing for them to make sure they have, you know, extra cash to cover, you know, additional outgoings. So it needs to be a personalized plan. So yeah, that's what we did for the client, and we're really happy, and you know, we're proud that we, you know, can help clients save so much, you know, make their life even better. So yeah, so if you find it useful, you know, probably review your loan and just give us a call. You know, we might find, you know, something that we can help you improve and help you, you know, save more money. All right, thank you for watching, and if you haven't subscribed our YouTube channel, please do so, because every week we have a great topic to share with you. Okay, thanks for watching. Bye for now.